Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so here we are. We've got Bitcoin on the 4-hour. I'm looking at the Coinbase chart, and from way back here, we were at this basically resistance point, and we had said essentially what we were expecting to happen here is either the breakout to the upside, and we put this purple circle in before this move ever happened when we were way down here, and we put the green circle in, and we said basically what was more likely to happen is we were going to bust out to the upside, and that this is the area we're going to take our shorts off of. So it did come a little bit outside of that range, only slightly, but to be able to call that move out ahead of time, anticipate it, not to mention that we had actually bought through this area because we had put this in before any of this ever happened. So I just want to remind you to go back and look and pay attention to who's calling out the moves ahead of time before they happen, and who's just getting back on the mic afterwards and explaining them to you in hindsight. That's that hindsight, TA. You won't find that around here, okay? So anyway, we took shorts out of this area right here. We're still confident with that move, but as we now approach a parabolic trend line here down in yellow, that's the area we're looking for to see, is this trend going to bounce and continue to the upside, or are we going to fall back out and then potentially start putting in a lower high? Lower low. Because at this point in time, the entire trend up here, we put in our initial dump low, then we put in a higher low, okay, then a higher low, and then you look off the next swing, that's our low again, and then look, a higher low on candle closes, and then higher low, and you notice the whole way up, higher low, and now here we are. This is the danger zone because we've come back down, and this is the low that matters. So if we come down here and we take out this low on a close, on a 4-hour candle close right here, and that's in at 85.34 is where the line is, but it's actually, depending on your exchange, you don't want to ever pick and choose little bits. I mean, it's usually clear by the market one way or the other, but 8,500 essentially is where that candle closes at. So if we get a close on a 4-hour below 8,500, that's going to signal to the market two very important things. One, we just put in our first lower low, and two, we're breaking down from this yellow parabolic trend line, which is two very important things. And you'll notice I have the white one here, which we use for the channel, the actual channel itself, and that's by candle closes, and that represents the bottom line. You'll see that floating around a lot of places, that bottom line, but people don't actually know why they have it. The reason you have that is because that's the channel line, okay? But that's the predominant trend has obviously been this entire time, very clear what's happening and where we're getting moves off of. But now here we are at the bottom. We've broken out of the channel, but we can't just discount this and say, oh, we broke out of the channel, so now we're definitely going down, because we need to pay attention to the parabolic trend line. The parabolic trend line governs the actual trend, because we can move around inside here as much as we want, but it doesn't matter as long as we stay inside this and keep moving to the upside. Because essentially all that would happen right now is if we came down here and closed right here, and everybody says, okay, we broke out of this right here and we put in a lower low right here. So we close right at the bottom here and close. And then all of a sudden we find massive support on that parabolic trend line, and we get a boost up to the upside and take out the high right here. And then all this is just a micro part of this move right here. So even though we come down lower right here, we then take out the high and continue to the upside, and it looks clear as day that we never broke the trend. So that's why you have to pay attention to what these different things mean in the market, because right now I'm hearing all over the place that we broke down from this channel, and now because we broke down from that channel and invalidated it, that the trend is broken, and now we're going to go back down to the upside, or downside rather. But we're not. The most important thing we need to pay attention to is this 8,500 level, because that's taking out this low, but it's also going to come into line perfectly with that parabolic trend line. So I'm not convinced right here that this is just going to sell off. And now the next thing to pay attention to, okay, I want to look at this really quick. I want to look at when we dumped off here, okay, that's our top point right there. So I want to pay attention to the absolute most important things real quick, and I'm just going to kind of represent them on the side here just so they're clear as day, and then we can kind of look at something in a minute. and see if that stands out to you. So let's start here at the top. We're going to put 1 at the very top. That's obviously where this topped out. And then we're going to put 1 here at the bottom, you know, and that's obviously the bottom, and that's where it bottomed out at. And now I'm just going to keep doing that on key levels as we go up. So when we come up here, we essentially max out right here and then sell back off. We get a move up above it, sell back off. But you can see this area is key. So let's pick that one out too. Okay? And then let's look at the next one. So now we get the move up here, and where do we top out at? We top out at that blue line, which we were already talking about. It's very important previously. But then we come back down here and we find support on this line. So let's pay attention to this one. This one seems important too. And then we get the move back up. We find resistance on that same line again. And then we get the move up. We get a little stutter step right here. Let's look over to the right, and it looks like that could be an important point too. Let's look at that one. And then once we get through that one, boom, we just pretty much like shoot straight up. I mean, kind of break through, get like a little retest action, but you can see this acts as support later on. So let's go ahead and support, you know, show that support line, resistance line right there. And then let's just you know, look at one more here. Obviously we get the move up to it, come back down, support. I mean, this one's like not as clear, just like to your naked eye, but let's go ahead and put that one. And now if we just look over here, we'll see, oh, I'm sorry, I forgot the most important one out of all of them. Oh my gosh, sorry, it's been a long day. The most important one out of all of them is this one right here, where we top out, can't get a close above it, can't get a close above it, slightly get a close above it, and then dump, come back up, can't do it again. And that right here, this is the area I shorted off of, because when we came back up and retested the 886, so now obviously you see what this is. This is all the fib levels. All it is it's the fib levels from the top of that move to the sell-off at the bottom of the move, to that wick down here. Okay, and you see how now the price action has been interacting with it, and what's been happening. So after we couldn't get above, I already told you, we came straight back up to the 886, and then we couldn't get it back above the 886, couldn't even get back up to the 886, and then I took my short out of this area right here. And you know, also you'll actually see too, I got the short signal right here, and usually when I get the hard signal, I like to wait for the retest, and when the retest fails, I'll take my short, because you almost always get like a signal and then immediately a move in the opposite direction that liquidates everybody that just FOMO'd into that signal. And then same thing happened here. That's like the regular signal that we get. You'll see the blue one showing up right here. That's like the test signal from the daily on the Bellina Assassina. And then you'll see here again we get the sell as well, and that's the daily sell on the Bellina Assassina. And you see like everything else is the same on the two of them. I'm just checking to see like reliability and essentially like seeing how the two of them interact together to fine tune them, and then potentially like blend into one better indicator, or you know, essentially just, you know, if parts are like less relevant or not useful, I'm just going to get rid of them. So but anyway, so we get to the 886, come back down. The 786 was like slightly relevant. You'll see we kept finding like support, but not nearly as relevant as the 886, not nearly as clear. And then when we come back down, look at this key area right here, the 618, the most important area in all of Bitcoin and all of Fibonacci, the 618, a key support and resistance area. As soon as we break down to it, we get the bounce. This is very clear that we're getting ready to sell off. When you get these candles progressively lower, every attempt to sell or buy gets sold into and then immediately dumped through a key resistance level. That's very clear. And then that's like right here is when you'd be looking for divergence to show up, but the divergence doesn't show up. This one goes lower and then the peak goes lower. So you know, you may get a bounce off this, but you know it's not going to be a strong bounce. That's what you're paying attention to see where it works out to. So now here we've gotten a low come in, and then we got a lower low, and now look over here. We got a low, but we got a higher low. So essentially, we're looking for that to play out potentially as divergence. But what I think is going to happen, and we're getting ahead of ourselves, what I think is going to happen is we're going to sell back up, or we're going to move back up here and then sell off, and this is going to be a fake out and then come down lower, and it's not going to actually be divergence. Or it'll actually build divergence, but we'll get one more sell off, like a third push. But anyway, so we dump down from the 618, immediately retest it multiple times, cannot get back above it, and we sell off 2 fib levels. below the 382, and that was below the 200 moving average too we were talking about, find resistance on it, and then we get the powerful push back up, but that's probably just somebody trapped in a position looking to move the price back up to the 0.5. So it's looking to retest that $9,000 and like $25 to $9,050 range. We're looking to get a retest. People will take a exit out of the position that they got stuck in from that 0.5 fib level, and then all of a sudden the market will sell back off. And potentially what it's going to do is it's going to come down here and see, is it going to get down to that 236 and put in that lower low, in which case if we do, we potentially get the capitulation out of this channel, or is it going to come down here, find support, and then get that massive boost back up, gain enough strength to finally bust through the rest of these sell orders that are right here, or in which case they might get pulled and the accumulation has taken place and now we break to the upside. So as where some people are sitting here calling this a descending triangle, saying we're just going to capitulate again, I think there's just as much of a possibility that we put in a flat top, it becomes then an ascending triangle, and then we break to the upside and we get that massive move up. And looking at fundamentals and everything, that looks more likely. And people are saying that fundamentally, I don't even want to get into fundamentals right now, but honestly the argument for Bitcoin and gold and all these different things, real estate, is actually very strong right now, because if they're going to print mass amounts of money, at least in the United States, I can't speak for other countries because it's different. I mean, I can specifically, but not in general. But as far as the United States is concerned, if you look at the way the situation is structured, even if they did print like a ton of money, as long as they dispense it to the people, it's okay, because the hyperinflation would be like essentially balanced out by like the strength in the economy. So you're not going to see like the deflation that people are like expecting or calling for. But you have to move quickly, because if you take too long, like the mindset of the people, the psychology of the people, like gets behind them. So then even when they do have money, they're less likely to go spend it. I mean, if you tackle the problem very quickly, what happens is people like catch up on their bills and then like, have the memory of a goldfish and forget about it, and like, everything goes back to normal. If you take too long and you change the mindset and psychology of people, you like scare that into them, and you enter like a true recession depression period, and it changes like the mindset of those people for like 25 years, and like the spending never happens. But the truth is, the reason they're not seeing, the reaction in the economy and the way that they're hoping for with all this stimulus money and everything, is that initially what happens is a certain amount of that money has to go towards paying like bills. Even if you're not behind on your bills, you pay off your credit cards, you pay your mortgage, you pay your rent, you pay like grocery bills, like whatever your regular stuff is just got to get taken care of regardless. Car payment, car insurance, whatever. So none of that money gets recirculated back into the economy. It all just goes towards like, the big banks or creditors or whatever. The actual money that gets recirculated into the economy and like really moves things is the stuff that's getting like spent like small scale, not like bills and stuff like that. It's like actual purchases, like consumer goods and stuff like that. So you'll see some of that still, but as long as that's lacking, as long as people aren't confident in spending money, like we have a worldwide consumer driven economy, and much of the world's economy is driven, not necessarily by the world's consumerism, but by the United States consumerism. So like we consume more than our fair share because of our lifestyle and like fast paced, throw it away mentality. So more of the world relies on us. So it's important that our mentality doesn't change so much that it hurts the entire world. So in order to do that, theoretically speaking, and I don't mean to go on like a huge tangent here, but theoretically speaking, the best way out of this crisis, as far as like the United States benefit and like potentially the world economy benefit, is to, print a ton of dollars and hyperinflate the US dollar. Because essentially what happens is if they print a ton of money, it hurts the wealth of people that are already like rich in the United States, especially. Like it hurts them, but it devalues the dollar, which sounds like a bad thing, but it allows the American consumer to buy like more goods. So if the price of everything stays the same, but but there's more dollars, everything's just going to get bought up at a higher pace. So then it stimulates the whole economy because there's not enough stuff. So if there's not enough stuff and you don't make more stuff, the prices go up, and then you get, inflation. But if you just make a ton of stuff now to meet that demand, then everything balances back out, and it actually like creates a stronger world economy. So essentially what it comes down to is by hyperinflating the US dollar and getting it to the right people, the consumers, so that they can spend that money on not only American made goods but like world goods, but specifically obviously it helps if it's American made goods to strengthen our economy. But by doing so, we're now able to buy a ton of goods from other countries. So part of the problem with, and I'm not going to get political with all this, but part of the problem with, Trump building up the dollar so much and saying how strong the dollar is, it's actually like really bad for the US economy. Because basically, it's like harder for other people's currencies to buy things from the United States because they cost more. So it's more expensive if there's a bad exchange rate between like the Canadian dollar or the euro or the British pound or whatever. If they get less dollars for their money, they have less buying power when they're buying American goods. So it makes us less likely to have exports to other countries because they can't buy as much. So they're more likely to buy from their own country or somewhere where they have a better exchange rate. So essentially, by printing more dollars and weakening the dollar, you have the reverse effect. The American consumer is now able to buy more goods, not only from America, but from everywhere. So as long as you don't make the prices go up and you make the demand goes up, but then you make the supply go up as well to meet the demand, you essentially create jobs, you create businesses, you stimulate the economy, and the only real negative effect that you have is you're devaluing the currency. So if you proportionately put that currency into the hands of the people, the consumers or whatever, essentially the poor people or the peasants, the ones that really move the economy, if you put it into their hands, the economy will proportionately grow and it will not have negative effects. But the problem is that's not how it works. If you put that money into the people's hands, all the rich people lose buying power as you print dollars if they don't proportionately get more. So like if your net worth is, $100,000 and somebody else's net worth is $1 million, if you get $100,000, of the new printed money, your net worth doubles. But if the guy that's worth $1 million only gets $100,000 of the new printed money, his net worth only went up by 10%. So now your net worth doubled and his net worth went up by 10%. So he net lost a big chunk of his value. So that's why they don't do it. It's not about it hurting the economy or problems or anything like that. It's actually the opposite. It would actually stimulate the entire world economy and basically like fix everything. I mean, there's still some stuff that would need to be fine-tuned. I mean, that's not just it, like, in 10 minutes I just solved the world's problems, but essentially that's what it comes down to. It's very simple, but the problem is that for the first time ever, one of these bailouts would actually benefit the people and not the rich, not the small percentage. It would benefit the large percentage. So that's why they're not doing it. So, maybe we should all like write our Congress people or whatever and say like, hey, just, we could solve this. But anyway, so there you have it. That's how you fix the economy 101, according to some guy on the internet. But anyway, back to the Fibonacci's. So essentially when we broke back down from the 618, we came down, touched the 0.5, but sold back straight through it. We were consolidating at the 382, which was also the 200 moving average. And then we broke through it. But now, look, we didn't get a powerful move, but we came back down and retested. So is it likely that we're going to come back up here and hit that 0.5? I think we are, because as you've noticed, I'm sure by now, we have this purple channel that we've been coming down in with the green heart line here. And again, this is another one where you have to just wonder about like the credibility of people's technical analysis. On the 4 hour, this is, a valid channel because, obviously we have the touch points here and touch points here on candle closes. Here it's a wick, and then we have like a bunch of closes, but the wick's outside of it. And then here we're back to like a wick. But that's like the most reliable way to draw it at this point in time. I couldn't really find any other way to draw it. I saw other people trying to draw like wedges and stuff, and I honestly couldn't find a valid way to draw it. So I'm just leaving that one off here. And if you did, it would like the only valid way you could even say to draw it would be like from here, which is a weird place to start, one, and two, I mean, it would essentially be like already broken out, and then we broke back into it. So I don't know. I mean, you could keep that in mind if you want, but it doesn't actually like add anything. It doesn't help you determine anything. It doesn't give you an idea where price is going to go or anything. So to me, it's irrelevant and invalid. So, but anyway, so we move back up here to the 0.5. We hit the top of the channel, and then I think likely that will be the failed test here. That's obviously a key point of resistance and support, and then I think we'll sell back off, and then we'll hit our 236 at the 85, whatever, 25 to 85.50 range, and that's when we're really going to decide, okay, are we going to break this and put in a lower low, or are we going to, you know, consolidate here, or even put in a lower low and then fake out? But really, is this going to hold? And that's also going to allow us to basically stay inside the channel too. So at this point in time, I think a very slight move up here, you know, looks good. But then basically, if you look at that in line with our indicators, that would basically be the blue coming up and then getting rejected off of the purple. And then again, looking at this here, it would be the blue coming up and getting rejected off of the purple, but we would get like a little green spike right here, and it would be the lower green spike followed by the red downward spike. So we'll see how that works out, and we'll see how this candle closes in like 26 minutes, but I think it's very likely it'll either be this one or the next one, and we'll get that punch up to like 90-30 or whatever, and then we can see where it really wants to go from there. And then that's also going to be on the TJD TDMACD. Like I said, that's going to give us that drive and then rejection. We get the drive and then rejection. We get the drive and then rejection. And then, you know, probably on the next one is when we'll see like the powerful breakout or potential like sell off, look for divergence. But at this point in time, it looks like we are very likely going to get a little test back up here and then the sell-off back down, at which point in time we'll be at the very important decision point in the market. So keep your eyes peeled at that 236 level, because if that breaks, what's going to happen? We're going to immediately take out the low here at 8100. I don't think we would stop. If we get a close below this 236 at 85, I don't think we're going to just stop right here at 8100. There's no reason to, because we'll have already taken out like the candle close low, and I don't think the wick low is like all that valid for like, you know, a consolidation point. It does line up at the green 236, but at that point in time, I think it's very, very much more likely that we're coming down to either the blue 382 or the purple 0.5. And if you're not familiar with those, you can look at some of the older videos and I draw out exactly how I get them. But essentially, you're looking at like the $7,800 range. So, but realistically, you know, if we do break out of the channel and everything, I mean, we're probably going to come back down here and try to threaten this, in which case we need to really just take like a broader look at our Fibonacci's. But, you know, keep in mind this on like the 4-hour time scale. If we pull out to like the longer time frames, exactly what we said happened. We came all the way up here. We broke out and faked everybody out right here, got the candle closed, and then I said, okay, this looks like it's just going to be a rejection, like bearish engulfing candle, and then it'll be like a massive fake out, and then literally we get a bearish engulfing candle, massive fake out. So now what are we going to do right now? You know, potentially test back up. I mean, we could test back up as high as 9,300 on the weekly, you know, but that would essentially just be retesting the line that we broke out from and then couldn't hold, and then, like, you know, I would just expect us to sell back off. But we do have to pay attention that we are starting to flip over the trend here, you know, and potentially start like diverging to the upside. So we'd still keep our eyes peeled on all this, but I think the most important thing to watch on the weekly is what's going on with the TJD TDMACD. We're coming up for that rejection, coming up for that rejection, just like what we're doing on the 4-hour, but obviously they wouldn't coincide. But it's the same type of thing. You come up and you find resistance on that red trend line, or if you're above it and you come down and it's still blue, you'll find support on it typically. So but we did get the buy signal on the weekly, but we'll see. We have to see how this all plays out. I mean, we're at a very important point. And the crazy thing is like what people don't realize is essentially if we break out of this channel and, you know, consolidate or get a powerful move up here or whatever and take out this high or threaten this high, like, yeah, you're buying in at, you know, 11,500 or whatever if you're going to buy above like the previous swing high, but you're buying in it with a very high likelihood of a long-term trending trade to the upside. So it's not like the type of thing where you have to put in stop losses and watch it every like 2 seconds. Like, you know, you're talking about like a year or 2 years or 3 years of like potential upside movements and like hundreds of percents. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But, essentially, like, yeah, it sucks. Of course, you would rather buy at 9,000 than 12,000, but, what's the difference really, like, in the grand scheme of things? Not much. And then once again, looking at this is essentially like mapping out like the channel trend line where we basically broke down from it, came back up, and we're just doing the regular thing you do. You break down from a resistance or support, and then or moving average in this case, and then you come back up and retest it. So we broke down, couldn't hold the 21, broke down from it, coming back up. We'll retest it now as resistance. If we can't break back above it, then we're coming back down for essentially like a sell to retest the next moving average. And since we just came short of testing like the 50 and of testing like this blue trend line right here, it's very likely that's what we're about to do. So I think it's likely we're coming back up here, potentially as high. And look, that's the 90-50. I mean, obviously, like, just lines up with the lower time frame moving averages. Like, that's why you use the multiples. So, but essentially, we're coming back up here to retest that. And if we can't get above it, we're going to get the cross down. And essentially, for the first time, this whole trend, I mean, this is where we crossed to the upside, was back here at 66.37. And that's why, you can take like the trending trades on a daily time frame, your short moving average and your second shortest moving average. That's your trending trade right there. So as soon as this crosses back over to the downside, one might take a short to the downside, assuming that what's going to happen is this is going to flip back over red. We're going to get like the continuation. We got the sell already. And then, this is potentially going to play out. We've got, the parabolic SAR. We've got the moving averages. We've got pretty much all the indicators telling us the same thing. It was a nice bounce, and we're essentially getting ready to go back down and continue the downtrend unless we can put in a higher low and then, potentially break out to the upside. But at this point in time, everything is pointing down longer term. So, but that's a great way to end the video and great way to pick up subscribers, obviously, which is why I'm so popular after all my great calls and awesome TA and free indicators. But if you're sticking around this time, you're already one of my subscribers, so I don't have to tell you. But go ahead and give us a like, subscribe, share, all that good stuff. Crypto Trend Trader, and I'm out of here.